Well, the vacation continues along. We're now in New York City, and fortunately, this last week was pretty low on news, whether that was economic news or whether that was Tesla news. So, good week for me to be gone. I will be back full on next Friday, but for the next 4 days, maybe it will be kind of thin, but let's see what happens here. The news certainly won't be thin this week. We'll talk about that in a minute. Well, the biggest thing over the weekend was the fantastic new interest rate deal on Model Ys. Now, hopefully, this 1% interest rate on Model Ys will be a massive success. This is something I've been promoting for a very, very long time. But let's remember, it doesn't matter whether you have a low interest rate. It doesn't matter whether you have a low price. It doesn't matter if you have a $7,500 discount. It doesn't matter if you have unbelievable leasing deals that are better than anything even close to similar to a Tesla Model Y. What matters is, does anybody know about it? And I think that's the big problem. It continues to be the big problem, especially in the United States. There's no reason why anybody that wants to buy a crossover SUV should be buying anything but a Model Y right now. And yet they are. And that can only be because people still don't get it. Had a conversation on the trip here with somebody that fairly knowledgeable, electrical engineer, working on solar panels, working on wind turbines, knows about that whole industry, and yet his concerns with Tesla would be fires. Yes, fires on the batteries. That was what his concern was, and whether there would be enough charging stations. This is still what's happening out there, and this was in the great state of Massachusetts. So we're not talking about Midwest. Anyway, I don't know what Tesla has to do to get the word out, but I think if they can get the word out about this pricing, Model Ys would just be flying. They wouldn't be able to make enough if they could just get the right ads going. All right. Well, Tesla's coming off a very tough week last week in terms of in terms of the news, but more than the news, it was just the stock kind of drifted down, drifted down, drifted down. There was no phenomenal news to really pick it up. This coming week will probably be impacted more by the overall market than Tesla news, but you know what? Not necessarily, because full self-driving version 12.4 could go wide this week. And hopefully it's going to be a major, major upgrade, and we'll see whether or not that might have an impact. All right. This is Randy Kirk, by the way. If you haven't hit the like button, that's a really good thing to do. Subscribe, all that kind of stuff, notify. Now, to be honest with you, this week, Brian White, there's not a chance I'm going to be able to do shows with him tomorrow and the next day. Don't know what's going to happen. This is going to be a very busy week. Going to go see the Met and the Museum of Natural History and MoMA, Museum of Modern Art. Yeah. Anyway, lots of stuff going on. So I'm not sure how much notifications you'll need this week to stay abreast. All right, let's take a look, though. The biggest things happening this week, what do you think? The CPI and the PPI. And weirdly, this month, the PPI comes first instead of second. So we start off with the PPI, and the headline number, which was up 0.2% last month. The folks that are being asked what they think is going to happen say it's going to go up 0.3 this time. This would not be good. And then the PPI year over year last month was up 2.1, and nobody's even making a guess on that one. Then we got the core PPI. That was 0.2% last month. They're thinking that will also be 0.2% again. And again, core PPI year over year, no guess on that one. What do I think? I think there's very, very little chance that we're going to see any softening in PPI. And yes, overall, this might be fairly close to what really happens, or it might even be worse. There's just nothing, no indications. Again, I'll talk more about this in a minute. All right, then we've got a couple of Fed people. Fed Chairman Powell speaks on Tuesday. By the way, the PPI was on Tuesday. On Wednesday, we're followed by the CPI. So last month, the headline number was 0.3% up. That's a 3.6 annualized. This month, those people that were polled think it's going to be up 0.4%. That would be almost a 5% annualized number. So that the stock market can't like that. You have to think that if this is what the folks think it's going to be, that it's already built into the stock prices, but I'm not sure. I'm thinking maybe not. So this is not be good for the stock market. CPI year over year was 3.5 last month. holding at 3 point, just down a tad, if they're right, to 3.4. Not a good number, not going to help. That slight deduction gets us nowhere close to the 2% that the Fed is asking for. Core CPI, now this one, they're thinking it's going to reverse. They're thinking for some reason core PPI, which was at 0.4% last month, will drop to 0.3, but that's not going to help either. That's 3.6% per year. It's not, and in fact, last month it was 3.8% year over year, and this month the folks that were polled said 3.6%. So all those numbers are nowhere near the Fed's requirements, and therefore no chance. Again, I continue to believe there is not a chance in the world we're going to see interest rates coming down this year. This is now going to be May. This is May. We're in the month of May. The Fed is going to want to see at least 2 to 3 months in a row of really good numbers before they're going to drop the rates. June, July, August. That means September is when they drop the rate. I don't think they're going to drop the rate 2 months before an election. I could be wrong, but that would take 3 months of good numbers, and nothing I'm seeing is suggesting that we're going to get those good numbers. So U.S. retail sales last month were up a strong 0.7%, and they're expecting that U.S. retail sales will be up 0.5% this month. Now, here's the weird part again. Like last month, I don't know that this is going to be, in fact, last month I turned out to be right. Retail sales minus autos, they had last month it went up 0.9%, which means autos did not do well as the rest of the market. But they're suggesting, just like they did last month, that retail sales minus autos is going to be up only 0.2%, whereas with autos it's up 0.5%, which would suggest a strong month for automobiles. I just don't think that's true. So we'll see what happens on Wednesday with regard to that. Empire State Manufacturing Survey was down 0.3% last month, going to be down another 10 if the survey respondents are correct. I think that probably is in line with everything else that we're seeing. I don't have a good guess on that, but it's in line with what we're seeing. Home builder confidence was at 51%, saying it's going to come down to 50%. Business inventories were up 0.4. They're saying it's going to come down 0.1%. Okay, that's all on Wednesday. Then we have the Minneapolis Fed president and Fed Governor Michelle Bowman are speaking on Wednesday. That's always going to be, that always adds to the excitement. Okay, then on Thursday, initial jobless claims last month were up quite substantially compared to a very flat 6 or 7, 8 weeks in a row. So 231 last week, it's suggesting it's come down to 219, which would still be a little stronger than previous weeks. Then we have the Philadelphia Fed Manufacturing Survey, which was up 15.5 last month. You're saying 9.4 this month. That would be a very strong number. Don't know if that's going to happen, but the Philadelphia Fed Manufacturing, that area of the country apparently has been doing a little better than some of the others. Housing starts. They're thinking housing starts are going to go up after a really lousy month last month at 1.32, suggesting it's going back to 1.41. Building permits, however, also going up. Of course, it's that time of year when you'd expect it. Last month, 1.46, also a little disappointing, suggesting it'll be 1.49, which is still not great, but it would be in the right direction. No, I don't have an idea on that one to give you, other than we have a massive shortage of housing. How many times can we say it? Import price index went up 0.4% last month. They're only expecting to go up 0.2% this month. And then minus fuel, last month it went up 0.1, and they're saying they don't have any idea what's going to happen this month minus fuel. Industrial production was up 0.4% last month, and they're saying industrial production will be up 0.2% this month. And then capacity utilization staying at 78.4. That's what it was last month, and they're expecting to be this month. Now, 78.4 is okay. Anything 80 and above is what we're really shooting for. A bunch more Fed speakers on Thursday. New York Fed President Williams speaks. Vice Chair Michael Barr, Loretta Master, Atlanta Fed Raphael Bostic, all speaking on Thursday. Then Friday, we get this one. This is nobody pays any attention to this anymore. The U.S. leading economic indicators. We've been talking about this for months now, that nobody cares. Nobody looks at this anymore. Well, it's supposed to be down 0.3%. after being down 0.3% last month and being down, I believe it's now 18 out of the last 19 months. And then Fed Governor Christopher Waller speaks. At some point, if the U.S. leading economic indicators are down month after month after month after month, at some point, it's got to have an impact. I don't know, or maybe not. Maybe the economy, the U.S. economy has changed so much because of demographics, because of the great wealth transfer, because we've had these amazing, huge amounts of money coming out of COVID and all the stuff that happened with regard to COVID in terms of the boom bust. Maybe the economy has really shifted for this period of time. And so that these leading economic indicators are just not giving us really good, solid information. Maybe that's the case, but I'm not sure that it is. Anyway, all right. So I did a deep dive on the Truflation website. Now I'm not very happy with Truflation right now. I continue to think that their numbers are not really that helpful. In fact, their numbers right now would suggest we're at around 2.3% inflation. And that's a CPI and PPI are going to be coming in at 3.5. So we'll see what happens this week. But I did go through all of the different categories, and I don't think there was a single category that would suggest we're going to see improvement. If anything, we're seeing increase. I mean, food prices away from home are still way up there. We've got car insurance going way up. We've got gasoline actually. Some of the stuff I'm looking at would show gasoline about the same as last year, but it went way, way down, and now it's coming back up and then tailing off a little bit in the last few weeks. But gasoline, I don't think is going to be helpful. So I don't think there was anything in those Truflation numbers that would tell me that inflation is cooling at this point. We'll also have Walmart and Home Depot both reporting this week. From Walmart, we're going to find out how Joe Average does. Is he spending money on the things? Is he going down, not buying the top brands and buying store brands and whatnot? Are they walking away from those non-essentials? Home Depot, on the other hand, what we're going to learn there is all about the durables, the durable goods. Home Depot's numbers recently have showed lower numbers. Walmart has been showing higher numbers. Will that continue to be the case? We'll find out later this week. That, I think, is all I've got. Oh, no, so we want to take a look at the overall, where the market is now. So let's start with so hold on just a second. We're going to take a little pause here. All right, now after that little break, let's take a look and see where things are right now. We have got we'll start with the equities tonight because it just happened to open to that. So on the pre-market, you've got basically no change. You've got the Dow down 0.03, S&P down 0.05, NASDAQ future down 0.02. That would be in units. That would be 11 for the Dow down, S&P down 3, and NASDAQ futures down 3.25. As you can see, while it is down, it's not really significant enough to make any decisions about what to do tomorrow morning. Then we have got the bonds down. The 10-year is down 1.2 at 4.492, so back under 4.5 on the 10-year. We have got the 2-year also down a half a basis point at 4.863, and the 2-month down, up, a little bit, 2.1 basis points to 5.411. That continues to widening. I can't figure it out. Don't know what to tell you, but we continue to see a widening in that inversion now on the 2-month versus the 10-year. All right, let's take a look at oil next. We have got oil sitting here at down 20 cents for Texas Intermediate, down 24 for Brent. And that is at 78 and 82.50. Down towards the lower end of the recent trading range. Natural gas down 1.15 at 2.226. That's still high, still kind of high compared to normal, or compared to recent, I should say. Gold is down $8 to 2.367, which is in the middle-ish of the trading range recently. And then copper down 0.42% at $4.64, about 10 cents now under the all-time high. We got the dollar up slightly as people look at the CPI. And of course, what we're thinking is that interest rates will not come down, even though what we're showing, at least today, the only thing that's making much of a move at all is interest rates, and they're coming down a little tiny bit. Anyway, and then crypto up 389 at 61,483. Okay, that's it for Sunday night. Hope you had a great Mother's Day, and we will I'll probably have a morning show each day. I think we'll be able to pull off a morning show each day. I will try to do that. In the meantime, it's been great talking to you.